everybody. What I'm going to take you through today is setting up a provision of doubtful debts, as well as all the steps that we need to do. But before we begin and we go any further, we'll just want to look at what bad debts are and how we handle these. So with bad debts, we have overdue accounts. They're basically our overdue accounts, and they're customers that have not paid what the amounts that they owe us. They're generally accounts receivable. Accounts receivable, as you recall, are people that owe us money, and they've purchased things, items off us, normally inventory, and they're going to make an agreement they're going to pay us back later. Some options then, if people that are overdue on accounts, we can charge them interest. Interest can be charged, and we must give appropriate notice. Sometimes you may receive a bill in the mail for your telephone, whatever company you use, and it will state in small print, if you don't pay by the due date, you will have to pay interest or an extra amount. The same thing applies to here, is the outstanding interest will be paid on the outstanding amount overdue. It's one way we can encourage our accounts payable to pay early. Sometimes though, we need to write these off, and we only do that if there is a slim chance we're not going to recover the debt. So you can have the most tightest credit policy in the world, and you're still going to have a likelihood that you're going to have bad debt, because these things happen. Unfortunately, businesses do not always survive. Sometimes business owners may pass on, or other things may happen. So bad debts. So it's accounts receivable balance that we deem we're not going to be able to receive, not going to be able to claim back. So we need it in writing. We need some evidence that they're not going to carry it out, and normally there are documents we can obtain to be able to get this money, to prove that this person was a bad debt, because we can claim a tax deduction. ATO do have a stance on that. My information here may be a bit dated, so I might post up a bit later some updated information on how that can be. So basically what we need to do, I'm going to take you through how to write off a bad debt, and how to set up a provision of doubtful debts and what that is, and how we handle that. So first off, skip that bit. So we need to, before any good company, they'll set up themselves up a provision of doubtful debts account. Okay, this is a new account that we probably haven't heard of just yet. So this account's going to be a negative asset, and the reason why is we're going to be taking it away from the accounts receivable when we put it into our statement of financial position. We're also going to use another account, introduce you to the doubtful debts account. So it's a bit confusing, the naming terminology. It's just the way we're going to name it. So down below here's an entry we're going to use, and I'll take you through how this works later, and when we set up the provision of doubtful debts. But we do need to set up a provision. They're just in case people that will be going into bad debt and would go bad debts. Normally, when we set up a provision, so provision is like a ration. It's just like a just in case. We might estimate the percentage accounts receivable. Generally, you look at trends, bad debts from previous years, how many generally happen. You need to look at the financial environment, economic climate. We need to look at the business, what's happening, what regulations in, how our business is going, and generally any changes you've made to credit policy, too tight a policy, you might discourage potential customers from purchasing off you. At the same time, you need to add strict tight policy because you need to stop potential bad debts from happening. So the steps we're going to follow, we're going to be writing off any bad. I'm going to take you through how to write off a bad debt throughout the year. How we, at the end of a financial year, how we transfer those bad debts to the provision of doubtful debts account. We're going to look at calculating a new provision of doubtful debts, and we're going to look at doing some closing entries, which we should be pretty comfortable with doing. Okay, so we're going to have a go at doing an example right here. So I've got an Excel spreadsheet open. So over here, I'm going to take you over to show you the ledger accounts first and what we'll be doing. And I've just put a few little figures here to help us. It's not really a word problem that we'll be working through, but hopefully this helps. That there. Up on there. Copied and pasted too many times. Alright. So we have a bad debts account in the ledger here. Okay, we've got our particulars, debit, credit, balance, and debit, credit column. We've got a doubtful debts account. This is an expense account. I'll just write that over here. We have a provision of doubtful debts account. That's a negative asset. And when I do up the statement of financial position, just over here, you can see it here already. I've already just put the names in. We do is a negative asset because we're taking away from another asset there, which is your accounts receivable. A bad debts is an expense. And down here we have our asset account, okay, which is the accounts receivable. I'm not going to include any GST or anything like that for now. Actually, I haven't worked it out. A GST in the ledger, but I will include it here in the general journal, along with anything else that I can think of. But I'm not putting a sales account in the ledger or bank account because it's just, I don't think it's relevant to the problem. So the first step that I'm going to follow is I'm going to write off the bad debts. I'm going to put the DY for during the year, because I don't know when that actually happened, and then write it here in the problem. And the bad debts for the year, we're going to use a bad debts account. And we're going to have a, the other accounts we're going to use is GST collected and the accounts receivable, because bad debts are people that owe us money, and the accounts receivable are the people that owe us money. Okay, I'm just calling it the control account. I'm not going to go into technicalities of how, let's timer out of the way. I'm not going to go into how that's, let's try and indent that. I'm glad here anyway. Okay, bad debts written off throughout the year. I didn't say if that was including GST or excluding GST. I'm going to say it was including GST. So 143,000. At GST, we can reclaim that because we were collecting that originally on behalf of the ATO or the government. So we can say that, hey, we didn't actually end up collecting that money off it. Can we have that back, please? And they will have to give it back. So that's that figure divided by 11 will be 130,000 because it's 1/11th of that. I think we've got another video online here on explaining how to calculate GST and why we calculate it away. Okay, so it should add up to 143,000, I hope. I'm not going to work it out just now. Of bad debt. I'm just doing this for good practice to have your narration in place. Okay, we'll summarise these steps later. So I'm going over here straight away. I'm not going to write down all the journal entries and transfer them. Let's do this straight away. I'm just calling this during the year because I didn't put a date in place. Accounts receivable will be the, no, it didn't. I have to type it in. I can do it over here. Alright, so accounts receivable, and the amount is this figure, $130,000. It's quite a bit. It's not, but there it is. Bad debts, the balance is this amount, and there's more money on the debit side. Go down below here. I'm going to put my bad debts in place because that was the other line. We'll put this into the ledger. It's plural. And I'm going to put it on the credit side because I'm losing some accounts receivable people. And it's going to decrease, sorry about the decimal places there, on some of them, the amounts I am, sorry, it's not 130,000, it is 143,000. Okay, so because that's including the GST, don't get that back anymore. So $215,000 is the amount I am owed. Okay, next up, we're going to transfer. Now, so we should move on forward to the 30th of June. So we've done the bad debts throughout the year. This is what's happened. Now we hit the 30th of June. This is balance date, because this is actually a balance date adjustment we're doing. We're going to transfer all our bad debts just over here to our provision of doubtful debts. This is the provision we set up. This is what we expected to be bad debts at the start of the year. This is what it ended up being. So it's considerably more. So we're going to transfer this money over, but we can't transfer it all over. We can only transfer only up to the provision, which is $15,000. Okay, so we're only going to be doing $15,000. Okay, so we're going to provision for doubt. See if this will press the equals key. I'm probably wasting my time. Yes, that worked. And we're going to put bad debts. So we have a little shortcut with Excel. Sometimes they help. Saves you with the typing. Sometimes it's not always good. Okay, so but I can't do the full 130,000 because I don't have provision enough for it. I haven't made enough provisions. Right, I only done 15,000. So transfer of bad debts. And we're going to put this under here, a little line under there. Right, so we've transferred it over, so I'll do that now on my books here. Do that. Oh yeah, so we do set that up. So 30 June 2020, provision of doubtful debts. And I'm only doing 15,000 because I haven't made enough of a provision for it. Okay, I'll explain what to do with the rest of this money in a moment, which is, how much is it? $115,000. And I've got to adjust this figure here because we have used up all our provision that we made. So we ran out of it. And it only can go down to 0, can't go beyond. And just fix this up. I'll address that in a minute. It's bolding. I didn't really fix the bolds up before let's put some in. It's easier. Okay, I'll just do that now. So I'll need to do another entry up. So let's get rid of all that bolding there. Alright. So we now have 0 in the provision of doubtful debts account, and we've got $115,000 in this account. I've got to do one more thing, and that's set up the new provision, which is to be 5%. I didn't finish that off. Accounts receivable there. The accounts receivable balance, which is 215,000. Okay. So simply put, 30th of June still. So step 3 is setting up the new provision, which will be, we'll need to use the provision of debts account and a doubtful debts account. Okay, so the provision of doubtful debts accounts a negative asset, so we will be crediting the account, and doubtful debts account is going to be debited because it's an expense account. So let's go over here. It's going to be 5%. I'm just going to use the Excel way. 5% of the 215,000. 5%. just using my formula bar. I'm just going to, just a little bit tricky. Rather than type it in again, just type it like that. Set up of the new provision of doubtful debts for the new, and they'll be all ready for the next financial year. So I'm allocating a bit less actually. I'm a bit surprised with this question. I probably would have, judging by that previous amount, we probably should have done more. That's all right. That's what this business wants to do. So go over here and we need to record that in here. 30th of June, and we're going to put in the provision. I left too many lines in this spot, that's okay. And it will be for $10,750, and the new one here is, I'll just use this figure here because I just realised I'm running out of time on my computer, space, and I need to get this video moving. Clean up my drive a bit, and doubtful debts. Okay, so we've got a new provision, 10,750. Doubtful debts is there, is our recording, and we've got a provision, our bad debts account up there. Other methods do combine them together. I generally don't do that. I like to have them separate. I don't want to confuse it too much more. And what I'll do while I'm on this page is we're going to close off the expense accounts. If you recall, we use the profit and loss summary. Revenues and expenses go to the profit and loss summary account. And I'll just write P&L summary. We're going to cover this in a bit more in the future lessons. We've done this before. I'm just doing it again. And okay, so let's quickly add these together. So whatever's left over in the bad debts account, okay, because I've written some of it off, but I can't do that, and it's not moving over. And doubtful debts. So these two amounts will be transferred over to the profit and loss summary, along with any other revenues or expenses I would have for this business. I haven't recorded them there, so that's there. I can just put closing entry as the narration, just in there. Okay, close. All right, so one more thing. I'm going to go over here to the profit and loss control account. We're just going to display this in the extracts. I should have that in the there. So I'll record all these in here. So I'm just having trouble scrolling at the moment using the touchpad. Accounts receivable control is here. Okay, so we've got this amount here, and what we do is over the side here on this column here, we subtract each of these from each other. Okay, get 204,025 will be like a net balance of that account, because that's the provision, just in case we might not use it all. You'd hope you wouldn't, but there are times when it will happen. Bad debts. So the reason I've still got the bad debts account, this means that if I see that there and I find your records, it means I've overflown. I've overdone it on I've underestimated my provision, and I've overdone my bad debts. I'll put it that way. So I've underestimated my provision, I've got too many. And same with, and the doubtful debts means that she's just sitting up for the next financial year. Okay, and this will go on in your profit and loss statement. Under expenses, and we'll be using subcategories more for classification into them. That area there, and I should balance it, but I won't do that, but there it is there. Okay, so just to recap the steps, just move this counter out of the way. So just to recap my steps that we have covered, we have step one is, my counter's not working. Great. My pen was not working. I'll have to draw off the mouse. Oh. Okay, give me a second. I have to type it in. The computer's not going to fail on me right now, I hope. Give me one. Let's get this in English. All right. Step 1 is to record the write off the bad debts. Step 2 is to transfer the bad debts to the provision. Step 3 is to set up the new provision. And step 4, if I can get this merged and centered, step 4 is to transfer your expenses to the profit and loss summary. Can't get the pen working at the moment, but this is basically what we do. I haven't transferred them to the profit and loss summary, but generally that's what we will be doing to close them off, and they're ready to start a new financial year, these accounts. Okay, and I'll just quickly do this bit here, and then that's it. Okay, so profit and loss summary for the bad debts, and that will be 0, and that would be 15,000 on the credit side there. So both 0, and hopefully that's all set.